Okay, this video we're going to take a look at how we identify consolidation and how we're able to work with it for a profit. Now, this is something that's challenging to many traders, is dealing with consolidation. The first thing is knowing that you're there before it gets too late. For example, this is what we're going to look at, is this consolidation that happened here on the Kiwi dollar between May and June in 2004. Now, what happens here, you see that you had a move coming to the upside, started a move to the downside, and then started wiggling across to the side. Now, many traders would find themselves in a fix here and lose quite a bit of money because they would start looking to go to the upside only to get stopped out, and then try and go to the downside only to get stopped out, and then try and go to the upside only to get stopped out. And by this point, we're seeing ourselves losing money, and finally we say, you know what, this is consolidation. Well, it's too late now, you know. So here on this particular day right here, June the 4th, we had a signal in the QuickView telling us that we have consolidation forming. So let's go to the QuickView and see how this runs. By the way, the consolidation that we have here ran for quite a few days, as you can see. It held, showing us consolidation. Now, this is how we work consolidation. Consolidation is worked when you see the C coming in here. Your price channels and your linear bias channels are the channels that we want to focus in on. Keep in mind that when we do consolidation, we're not necessarily giving up or quitting on all of our other methodologies with our bias and our levels. The consolidation levels that we're doing here with these channels is nothing more than a supplement to help us keep our profitability. Okay, we have a scenario, we have a market condition, so we adjust to that market condition along with what we're already doing. Now, this is how it works. By trading in these channels, what we look for are in these highs is where we look for shorts, and in the lows is where we look for longs. We'll use these lows for the targets to hit from the shorts that we take, and we'll use the highs as targets for the longs that we take from the lows. Okay. The other thing that we want to keep in mind is, for example, if we close on a day that's underneath what we're looking at in terms of the channels like here, basically that's telling us, well, we're not going to be able to really look for a long because there's nothing supporting that close at 61.69. We could maybe take a short near its high, but we can't really look at a long per se in terms of consolidation. Okay. The other thing is when we are between the longs or the shorts, this is where we look for finding the resistances and the supports, and when we get it filled, we start targeting that high or that resistance. I hope you have the gist of this. One other last thing we want to keep in mind when we're doing consolidation is that during the beginning of consolidation, we tend to stray towards the extreme highs and extreme lows. As consolidation wears on, because consolidation will only last so long, the farther into consolidation you go, the closer you're getting to it breaking out or breaking down, is when we start being able to say, well, okay, maybe a little tighter or looser, but depending on the market condition. Okay. So with that in mind, let's get started. We're going to go through a few of these so you can get a feel for how this works. I'm not going to go through all of them, but just as a side note, I'd like to let you know that throughout this whole area of consolidation that we have here, where most people have been losing money, we would find ourselves with roughly about using this method that I'm about to describe, that I'm describing to you, would be roughly around about a 500 or so pip gain. All right. Of course, you'd have a few days where you take some hits, a few losses, one for 44, one for 19, one for 67 even, but you're getting gains like 117, 104, 96, 55, 82, 49, and so forth. A few small ones, maybe 11 or 15 here and there, but they total up at the end of this consolidation. By the time you reach this day, of course, there's some no entries as well. There was a total of roughly around 508, 509 pips. Let's go through this real quickly. We're running out of time. On this day, when we see the consolidation closing at 61.69, we're below the both channels, so there's really no entry there. So we go to the next day. On that next day, we do get a fill at 63.16 when the price moves all the way to 63.48, ends at 63.27, costing us a 15 pip loss for the day. But the close is above the channels now. So what we do is we hold that short from 63.16, actually from this point 63.27, put a stop above the high and see if it'll continue working down. Maybe this was the resistance, and exactly that's what happened. It didn't break it, came back to 62.71. We get some of our money back. And by the way, from the 63.16, we're looking at a target of 61.92. That wouldn't fill. Then we adjusted to 62.01. That didn't fill. Then finally on this day, it fills at 61.75, giving us a nice hefty gain. And of course, we're also reversing and looking for a long at 61.75. And that's about an 11 pip gain. So on we would go looking for new territories to make some money. 61.90 is where we're at, and then we'd find that that's in between these channels. We'd take a short at 62.94. It would hurt us a little bit, giving us about a 44 pip loss, but that's also the target that we set from the 61.75. So we've balanced that with a gain from 61.75 to the 62.94. So it evened out. We lost some pips, but we gained some as well. Is what I'm saying. Now we end at 63.34 and we're short at 62.94. The close ends above the channels once again. Okay, so we have to hold on to the short that we took and hope that it doesn't break the high. Fortunately, it does not and comes back down. We get some of our money back. The target of 62.31 doesn't get filled. It only gets to 62.61. So the next day we're still holding that short, looking for a target around 62.24. It gets filled. So the payoff from 62.94 that looked so bleak on this particular day by losing 44 pips wound up giving us a gain or a profit when it hits its target from 62.24. It went all the way to 62.16. It just took a couple of days. But you see what happened? It went down. By following the rules, we found ourselves with move to the downside nevertheless, and we get a profit. I'm going to stop here for the sake of time, because basically this is the gist of it all. It's a very simple process. If you need to go over this video or as many times as you like, just so that you can get the idea of how we work consolidation. This is identifying it. Also, one other quick note. When you are looking in your daily bias and you see this bullish takeover, as I call it, what that is when your B column is surrounded by the opposite color, like this black is surrounded by red. Okay, if it were the opposite, such as a red surrounded by black, I don't see one right here. This is an opposite, red surrounded by black. This is the takeover attempt. Usually when this occurs, that means consolidation is either here or on its way. See, there we go, consolidation. All right. All right, that's just a side note. When you see this in your daily bias, look to the column for the C to see if you see consolidation. Okay, that's it for identifying and working in consolidation. I hope you enjoyed it.